All right. Hey, good morning. Welcome and thank you for taking the time to join in live. Um, it's an interesting time of year because this is kind of the time of year when everything just like comes to a grinding halt. And good morning, Bob. Everything just comes to a grinding halt, and um, from a news flow standpoint, right? It's like we go through June and we go through July, and the market reacts and reacts violently to every single weather forecast that comes out, and we just continuously like just jerk this market up and down and all around, and it wears you out, right? We've been talking about this for several weeks, and so here we are, August 25th, and we're trading $5.42 corn with one of the largest crops on record, that's coming into the market, and we're doing that in the time of year when our seasonals are the weakest, right? From late June all the way through the end of August, early September. Seasonally, over the last 30 years, you would see extreme weakness in the corn market, right? Why is that? Well, it's because it's when it all comes to market, and we're trying to hedge it. So farmers are making forward sales and everything else. And with all of even with all of that, with private analysts saying, "Oh my gosh, we have a record crop," and um, a near perfect pollination period, with all of that, here we are. Um, and, and then you start looking at the demand side of things, and we realize, oh, hey, China hasn't bought anything for a long time. Well, I think all that is starting to shift, because now the supply weather narrative, where, hey, this crop is huge, that narrative has now been beat to death, and the market now knows that that's true, right? We're going to have a big crop. Personally, I'm still in the camp that I don't know how big this crop is going to be. Especially on soybeans, you can't take 25% of the crop acreage in North Dakota, South Dakota, Minnesota, and northwestern Iowa and have condition ratings that are in the teens and low 30s and expect to have a record yield. That just makes no sense to me whatsoever, because the crops to the east, their ratings aren't that much higher than everybody else. And they didn't plant extra acres. If we planted extra acres, it was in the Northwest where the trouble spots are. So something's not adding up. And when you start to look at those things, you realize that the risk to the crop is probably getting smaller, not bigger. It, um, if you're looking at good to excellent ratings, and you're looking at some of the things um, that that analysts want you to look at, and you're trying to compare year to year to year, it's not that simple. And I'm thinking of 2017, for example, where the crop just got bigger and bigger and bigger in August. But that was because it was really cool and it was really wet. And so the grain fill period was really strong. Now, I'm not an agronomist, so I'm not gonna talk out of school beyond my expertise, but I know that it was 107 here yesterday, and it and nothing did well yesterday. You couldn't water your flower pots enough. You couldn't water anything enough to make it work. And I can just imagine a corn plant um, not necessarily thriving in that environment either. So I think there's a lot yet to be said. So let's look at what the technicals are telling us, because as the market quiets down, and these news flows start to contract, and we're not reacting to weather forecasts like we have been, technicals become more and more important. And so here's your corn chart, right? This is your daily chart, and we are in this huge consolidation zone. The size of the consolidation zone doesn't matter. It's still a consolidation zone. We are banging from 638 all the way down to $5, and we have been doing it for 90 days. So here we are, almost dead center of the range. And I've got this rectangle drawn on here. And the reason I drew it is because you can see where we were, exactly where we were last week, is we were sitting right on the top of it. And as this triangle progressed, traders started to really tighten down the range, right? Everyone was getting lulled to sleep. Then we had our report, and we blew out the top side of it, but we immediately came down and couldn't test it, which is why we said last week, hey, we need to be hedged because there's a risk that we might break down. And we absolutely did, right? We broke down, we ran all the stops, and then on Monday we reversed it. Yesterday we had nice follow through. Today we're undecided, right? I cannot tell you if this line is going to hold or if we're going to come back down. My sense is that we're going to hold, and that we're going to work to the top end of this range and then explode up out of it. And the reason I think that is because we're starting to see demand pick back up. The supply shock of a record yield is known. It's already in the market. We know it's huge. We already know that we have a risk of increased acreage. There's nothing that we don't know. And we also know that China hasn't been buying corn for a long time, and yet we're still holding 540 corn. If you look at our balance sheet and you just do the math, and I've showed it to you week after week after week, we are on the brink of needing to ration corn globally. Ukraine's crop is small, or is smaller than the market thought. You've got the Brazilian crop that the USDA still hasn't recognized just how small that crop really was. And now you've got a new layered threat of dry conditions with La Nina building in South America as they begin to plant. So the market's going to be real slow to take to devalue corn when the world balance sheet is continuously getting tighter and tighter and tighter. Will China come to the market and buy it? I don't know. They're already obligated to buy a lot of it. Will they buy more? Probably, because they've got billions of people that need to eat. So I think I think we're going to work our way back up into here, and we get back to the top side of this. I think we're gone, and I think we're going to be in a situation where we've got to ration corn. So I'm still super bullish corn. I see nothing fundamentally that can sway that. But besides that, right? Just because we're bullish and because we don't see anything fundamentally, you got to be realistic that doesn't have to happen. And the market can break lower like it did, which is why we're 70% sold with call options at the money. We've collapsed all our call options down to between 530 and 550. We're sold between 550 and about 535 after all the option numbers in. So we are spread perfectly to capture a move up and to not get hurt on a move down. So if you're not at that position where you're at least 50, maybe 70% sold with upside open, I think you got to get there, because when we do break out of this triangle, I think it's going to be extreme. Now, a couple other things that are pointing towards upward breakouts. One is wheat. The situation in wheat is getting more bullish. Let's pull that chart up here. And then we're going to finish this day with the weekly charts. So WEZ21. All right, here's your daily chart of wheat. We broke out the top side of the cloud. We're in a nice little retracement. Everything here is in the buy zone. Wheat looks like it's getting ready to pop back higher. And what's going to drive that? Well, it's the fact that we need to buy acres. You've got corn screaming higher. You've got nice margins in corn. You've got great margins in wheat, but it can't afford to lose acres. So it's not going to drop very far from here. You've got the Russian wheat crop getting smaller. You've got our wheat crop that is questionable at best, and nobody's really talking about it. So I think wheat in this setup is poised to really run. We've been bullish wheat a long time, and I see no reason to change that analysis. I think wheat's going to put pressure on $8 sooner rather than later. So if you haven't re-owned it, I think this is a really good area to re-own it at. I think that that's also going to work to keep corn moving moving higher as well. The dollar index seems to be nearing a top and getting ready to start work lower. We're bearish the dollar. We think it's going to continuously devalue. I just don't see how it can't, with as much stimulus as we're pumping out, and that should be supportive to our export market and to our prices. And then you've got soybeans with a huge day yesterday, right? So soybeans are maybe the most bullish, and to me, I don't understand why we're not, significantly higher already, other than to recognize that rationing is an extreme event. And we've said this for weeks. Probably the reason we're not higher in corn and beans is because rationing is so violent, right? It's literally assassinating an industry. You've got to put somebody out of business in order to ration. And I don't think that we've rationed anything, because I can't find a single industry or metric that is unprofitable at the levels that we're at. We get lots of rhetoric, and we get lots of people talking about, oh, it's too high and we don't want to pay for it, but yet they still buy it. And if you're a sovereign government, you can't afford not to buy it. So therefore, there's no price that you won't pay for it, because you can just print money. And I think that the market's gonna wrestle with that here in the next 7 or 8 months. So I think beans had a big strong day yesterday. Just like corn, we started to work higher. We're holding above these lows, which is the market telling us that there's underpinning support here, and it won't take I think a move above about 1340, 1350, and we're going to go put pressure on $14 again. Watch these highs right up here, right? 14.18 on November. If those get broken, then I think we're going to explode up out of here and put pressure on 15.70 or even $17 on beans. There's just no room for error on soybeans. The balance sheet, and I don't have it in front of you. Let me pull it over here. The balance sheet on beans is just too bullish, guys. Like, there's no room for error, and there's these numbers that the USDA gives us. They're not made up, right? And you can only move them so far. I mean, you can only change the planted acreage so much. You can only change the harvested acres, right? The yield, it is what it is. And with the 107-degree heat in August, with rains that have really pretty much disappointed on about a third of the soybean acres, I don't know how the yield gets bigger from that report versus smaller. So just apply some logic there, and just think, what are my soybeans doing, right? How are they responding to the heat? I think we got to go. I think that yield comes down and probably below 49. We're not going to find more acres. We're not going to find more harvestable acres. It's not like that percentage is going to go higher. Then you've got demand. How much are we going to use? Well, if we don't have it, we may have to use less, but that doesn't necessarily raise our carryout. So I think you've got the market really trying to reconcile itself, and really trying to decide, do we have to ration or do we not? Because 33 million bushels is too tight. 150 is really tight. We've been that tight all year long, and we've been trading in the teens. So we get any tighter, and you got to go higher. Same with corn, right? It's the same situation. You get a stocks to use under 9, and you've got to slow things down a little bit. So lots of guessing, lots of stuff confusing people, but just look at your chart patterns. Underlying support all the way around. We're in these consolidation ranges. Consolidation favors continuation, and there's been nothing that's hit the wires that would change that mindset. All right. Last thing we're going to go through are the weekly charts. We've been doing this for several weeks. I think it's important to keep your perspective. This is the weekly of December corn. consolidating from the top into that wedge. This is the first major pullback after a huge explosion higher. What generally happens after that is you explode back to the upside, you make new highs, and you would typically go through a Fibonacci extension level, which can count upwards of $7 and ultimately maybe even to all-time new highs if we do end up tighter than anticipated. You can see last week's action did nothing to change the weekly counts, right? It didn't break anything major. So far this week, it's not doing anything major. We've got to get above, we've got to get up and out of here before we can, get too excited about anything. But this is not a bearish chart, guys. This is uber bullish and something that you just want to be really, really patient with, because when it does move and explode, it could be truly dramatic. All right, soybeans, same thing. Yes, we're trading huge ranges. Yes, that is $2.50 from top to bottom on the pullback. But big deal. What's $2.50 when you rallied six, right? It's not a big move. Look at your Fibonacci retracement levels of from the low on the weekly chart. Boom, you haven't even retraced 38.2% of the entire move. In technical analysis, what that's telling us is that this is an extremely strong market, and we should be working ourselves higher, all the way up into this 1570 to 1650 range, right? We will ultimately, I think, resolve this higher because this consolidation zone just calls for that. So if we do break out the downside, I don't know what'll do that. I don't know what'll cause it. It can happen. Maybe we just need a deeper retracement, right? But I think just being patient and waiting is the name of the game on all of these markets. Wheat no different, right? Here's a weekly chart of wheat. Small little pullback into a third wave. This is what corn and beans should look like and do after their pullbacks, right? Here's your first pullback after a big move, and then you explode higher. Now we're pausing before we take this thing even up higher to 805, 820. These charts are bullish, guys. I don't know how else to say it other than to be patient and wait for it, because more things I think are going to come to the market that push us that way. All right. I sound like a broken record. I feel like I'm saying the same thing week after week after week, but that's what the market's trying to do to us. It's trying to lull us to sleep. It's trying to get us off kilter, and before it explodes, there won't be any bulls left, I don't think. I think that everybody will abandon the bandwagon and will just wear themselves out. But if you look at what the funds are doing, the funds are not trimming their positions; they're building them. They're net bullish. They're long, even after all of this consolidation. What do they know? Well, they know consolidation favors continuation. I think it's that simple. So I'm going to stop beating that horse. I think we're going to have to keep talking about it for a few more weeks. As harvest comes in, and you got to go counter trend to explode higher in September, but we did it last year, and the fundamentals are more bullish this year than they were then. So I don't see any reason why we can't. All right, that is what I've got for you this week. Please call if you have questions. Again, we're 70% sold on corn with upside open, because I think we're going to need that upside to be opened. And I think that's true for all the grains. If you've got risk and you're not sleeping at night, please call. Let's get it moved. Let's get it parked. Let's do something to help that out. I'm not opposed to being 70% managed here, because we do have cash flow needs to take care of. So please call. We're happy to help with that, and then we'll just wait and keep waiting and seeing what happens as this thing continues to digest the information as it gets presented to it. I hope you guys have a great week, and we will talk to you next time.